ET Now Startup Central, India's first and only daily show dedicated to startups and entrepreneurship. I'm Chandra Shrikant, joining you live from India's startup capital, Bangalore, and we have a power-packed lineup for you over the next 20 minutes.
That's right, I'm Krishna Kumar, coming to you live from ET Now's Mumbai studios. First up, a check on the headlines here at ET Now Startup Central. K Ganesh, one of India's most successful serial entrepreneurs and investors, tells us why he is not pessimistic about the current environment and why some of the fears may be exaggerated. The roadshow for India's first e-commerce IPO, Infibeam, kicked off today. Founder Vishal Mehta tells us about the valuation in this closely watched IPO. The Delhi High Court asks Ola and Uber to furnish details of how they are switching to CNG in the national capital. More details coming up. And in our special segment, Budding Star, we profile a startup that aims to help you file tax returns in a jiffy, ClearTax. We're also kicking off a new segment on ET Now Startup Central, Decode, where experts help you demystify startup buzzwords.
Krishna, you know, the last few weeks, most VCs we've been talking to have been pretty pessimistic, focusing on a lot on terms like unit economics, cash burn. But we have a voice on the show who is more optimistic than the others, possibly because he's also an entrepreneur and an investor. We're talking about K Ganesh, one of India's most successful serial entrepreneurs and investors, and he now has investment companies such as Big Basket, Bluestone, and remember, he also runs Portia Medicals. Mr. Ganesh, great having you on the show. Thank you so much. Take us, wear your hat both as an entrepreneur and an investor. Take us through your own sense of the current environment, because a sense of caution has set in, hasn't it?
No, I think this entire concept of gloom and doom now is as overstated as last year's euphoria was overstated. So I think there are three different aspects to it. One, there is a bear cycle. We do see softening in valuation. The amount of capital available for the startup ecosystem has come down because some of the hedge funds, foreign players who came in to play in the Series B, Series C stage have stopped coming in. So there is a reduction in the capital available, especially for Series B, Series C. There is a softening in terms of the valuations. They are not what it was. So that is a fact. Beyond that, there is absolutely no reason for this gloom and doom and deep depression that seems to be affecting everybody in the ecosystem. People talk about how some startups are firing people, employees, they are downsizing, reducing the number of cities. All that, if you see, is a small fraction of the total hiring that took place last year, small fraction of this total startup activity. So it is not really reflective and it's not statistically significant. Similarly, Fidelity marked down its valuation of certain startups. Morgan Stanley marked down. Again, this is a private mutual fund marking down a valuation. Was there a valuation run up last year? Yes. Did they overpay at that valuation? Perhaps yes. Has it come down? Yes. Does it mean is there a bubble? 100% not. There's an actual transaction taking place, growth taking place, real pain points being solved. All of it is robust and good. It's not going to go away. Your buying online is going to happen. People are going to use internet more and more for products and services. That is going to happen. Prices will correct like in public markets it corrects. So I'm not a subscriber to this gloom and doom theory. I'm very bullish, especially if you look at angel stage, Series A stage. Lot more funds have raised money. Lot more funds is available now. But we have to temper down our expectation to lower quantum of funding at a lower valuation than what we would have raised last year. But that's perfectly fine.
All right, Ganesh, this is Krishna coming to you from ET Now's Mumbai studios. I want to ask you this. All the fears about valuations, sort of emerge around one particular subsect of the startup ecosystem, the food tech space. So tell us, what's your take? Is the worst over for food tech as a space?
No, I think I think certain models which got funded, certain models which got executed, startups that got started in the last year boom phase without solid unit economics, okay, right, will face a major challenge, okay, right. They should not have started first of all with that model. In a normal times they wouldn't have started. In the euphoric times they not only started, got funded. So they will be, food tech is one of them. For example, in the food tech model, if you take the delivery model, where people deliver food made by restaurants, the aggregator model, there is no business model. You cannot, the cost of delivery is 60 rupees to 75 rupees. You cannot sell somebody else's food for 200, 250 rupees, make 10% or 15% money, which is about 30, 40 rupees per order, but spend 75 rupees in delivery. You lose money per order on every order, even without cost of acquisition. So there is absolutely no business model. Similarly, like the fresh menu model, if you take the full service food restaurants, in the full service food restaurants, you have a challenge that unless your order value is more than 300 rupees, you will never be able to make money. So the companies that shut down in the food space are all companies that were delivering lower end food where the order value was 100 or 150 rupees. There, even with 50% margin, your cost of delivery will not get recovered. Forget about cost of marketing. So those are always unsustainable business models. I think that they have no place in the startup ecosystem to be there. It got funded in a euphoric time. I think those models are over. Strong models where, like the actual internet only cloud restaurant model, where the order value is more than 300, it's a full stack food business, will thrive.
All right, Ganesh, we will leave it at that. K Ganesh, co-founder, Growth Story, and of course, serial entrepreneur. Thank you so much for taking time out to be with us here on ET Now, Startup Central. Moving on. The roadshow for India's first e-commerce company's IPO, Infibeam, kicked off today. We did have Vishal Mehta talking to us about it yesterday, but now we have founder Vishal Mehta and CEO of Infibeam telling us about the valuation in this closely watched IPO. Take a look.
So we're raising 450 crores. It's all primary. It goes into the company. There's no offer for sale. Out of that 450 crores, we have about close to 230 odd crores, which is going into building out the cloud-based data center, as well as moving our corporate offices. That is going to be in GIFT City, Gandhinagar. We've got about close to 37.5 crores allocated towards the capex that goes into the last mile logistics centers. We are expanding into 75 additional logistics centers. Today we have got close to 12 logistics centers. And then we are allocating about 65 crores into software, which allows merchants who are using our infrastructure to advertise and publish their ads, their digital ads, so that they can get more demand and traffic. So that's typically the three objects that we've identified as part of our RHP filing. The rest of it is general corporate purpose. So there's a price band. So of course, it is a book building process in which the final pricing will come at the end of the issue. But typically the total dilution will be in the 20-22% range. So the 450 crores will, amount to about 20 to 22% of dilution. If you look at the post-issue valuation, it will be close to 20 to 50 crores or around that range.
Certainly an IPO, Krishna, that people are going to watch out for to really gauge the valuations in the e-commerce space. But moving on to another space that's been making news every day, we're talking about cab aggregators. Now, the Delhi High Court has asked Uber and Ola to furnish details of how they will switch to CNG mode in the national capital by March 31st. Remember, that was a deadline set by the Supreme Court earlier. And we have Arun Nayal joining us from New Delhi for more details on that. Arun, take us through the entire process, and are Ola and Uber really ready to go complete CNG ready in New Delhi?
Well, Delhi government has been seeking this information from both Ola, Uber and all other radio taxi aggregators in the Delhi High Court. So now Delhi High Court has specifically asked these companies to give an affidavit to the effect that how they are going to switch to CNG mode. Remember, the Supreme Court had asked them to switch to CNG mode in December and had given a timeline of till 31st of March. It is 31st of March that they have to convert all their vehicles in the National Capital Region plying under their platform. They have to convert them into CNG mode, and they are racing against time. So now the court has asked these individual cab aggregators to give the details how they are going to switch to CNG mode and how many diesel vehicles are left with them. The Delhi government wants this information because post 31st March they want to take action against violators in this case, and that is why they want to have details so as to know which vehicle number are applying under which platform, so they can take action. The Delhi enforcement agencies can take action against violators. Now, recently Uber had said that it has aggregated 8,000 CNG odd cabs, which is they have said that 8,000 CNG cab have been aggregated, but the actual number which Uber has under its platform is quite huge. So now it remains to be seen how they achieve this target, but right now it seems that they are racing against time and would find it difficult to match up to the target of converting all their vehicles into CNG mode.
Nayal there getting us the latest on online taxi players looking to go all green in the National Capital Region. Thank you so much for that update. And away from that and on to our special segment, Budding Star, where we have a startup, an Indian startup that promises to help you file your income tax returns online in a jiffy. We're talking about ClearTax, and we have the CEO of ClearTax, Archit Gupta, joining us here on 18 Startup Central. Archit, good to have you on the show. It's good that we're having you at this point in time, and viewers would like to know more about ClearTax, especially at this time of the year. Tell us what, according to you, sets you apart from your rivals, the secret sauce, so to speak.
Thank you for having me, and great question. So ClearTax helps people do their taxes online, let them e-file, and then save their taxes online. So this is pretty important. Like March is coming around and people generally struggle with taxes. So our company helps people do their taxes and save on taxes, and so people really get excited when they can do this on their own, and on our platform they can do it on their own. And if they need CA assistance or if they need expert help, they get that from our platform, and so we can provide you a CA who can then help you with your tax returns. What sets us apart? We have over 1 million users. That's like 3% of all of India's tax returns go on our platform, and basically we make it super simple. We make it for people like me who don't know much about taxes, and so it really helps. So basically we have videos, we super simplify the process, and now the app is coming out, so you can do your taxes on your mobile phone. So that really helps.
Archit, all-important question, where do you make money on the individual side, on the company side? Take us through your revenue stream.
So great question again. Monetization is very important for startups, and we are very focused on that. How we earn money is both consumer and businesses. So from consumers, we make money when they take our paid services or when they decide to do their tax savings or take advisory or consultation, and we have paid plans for that. They range from rupees 600 all the way to rupees 13,000. So that ticket size sort of gives us good revenue. We have NRI customers and so on and so forth. On the business side, we have multiple products for businesses to do their taxes, to do their TDS quarterly filings, which are done when, for example, when you work at a company, they'll deduct TDS from your salary every month, deposit it, and then they have to report this to the government. So our software speaks to the government, figures out what the corporation needs to report, and we have very large customers like ICICI Bank and so on. So growing in that as well.
All right, Archit, that sounds good, but tell us, are you currently loss-making, and also what exactly are your goals as far as the, say, next 12 months are concerned?
Yeah, so as a startup, we invest all of the revenue and the capital we make back into the business. So it depends on every year's financial projections, and not deep losses, but investment back into the business. And as we grow into the future, most of our focus will be on consumer and business revenue. Again, we anticipate 40% of our business coming from consumers and the other 60% coming from small, medium and large corporations.
Finally, Archit, ClearTax's claim to fame is the fact that you made it to the Y Combinator batch. Tell us about that experience, and how did it really help shape your startup? I mean, I'm sure this would be of interest for other startups who want to apply for this program.
Yeah, so it's a very interesting question again. YC, Y Combinator as it's popularly called, YC, is a very famous accelerator, like companies like Dropbox, Stripe, Airbnb came out of it. and we were the first Indian company to be funded by YC, and it was a fantastic experience. So we went in summer of 2014, flew out to California, lived there for 3.5 months. It was a very stressful time because our tax season was going on, which is June and July, and we had to fly back and forth. We probably took 14 flights between the three of us to like just make that work. But the experience was fantastic. You have guys like Mark Zuckerberg, Peter Thiel come speak to you on Tuesday. You get to like one-on-one interact. You can talk to them. They sort of talk about like their journey. Like the Stripe founders come and like talk about like they were sitting in the same chair we are sitting 3 years ago, and their company is valued now at $5 billion. So you like sort of see that same sort of pedigree of founders, and then you build like a lot of network with the founders who go through Y Combinator at the same time you do. So there were 2 nuclear power companies, 2 biotechnology companies, and 1 nanodiamond company, and so on and so forth. So you make friends across different segments, and you sort of learn from their experiences. So when they are raising capital, you get insights. When they are like having a customer issue, you sort of discover how to handle that. So you get a lot of insights from these interactions. So a lot of fun. The YC partners are awesome. So Sam Altman and the Paul Graham and other guys will sort of help you, mentor you, deal with difficult questions. So you sort of get that network in the Silicon Valley as well. So which you sort of don't get that exposure in India. So it's kind of awesome to have that.
Thanks so much, Archit, for joining us on ET Now Startup Central. Here's wishing you the very best. With that, Krishna, tell us what else we have today.
Chandra, as we promised everybody right at the beginning of the show, we are kicking off a brand new segment here on ET Now Startup Central today. It's called Decode, because that's what we aim to do every week, where an expert voice helps demystify a buzzword in the startup ecosystem. And today, we have none other than Kris Gopalakrishnan, the co-founder of Infosys and the founder of Axilor Ventures, decoding the similarities and differences between artificial intelligence, machine learning, and the Internet of Things. Listen in.
When computers mimic human beings, they show human-like capabilities. That's called artificial intelligence. For example, if they can recognize spoken speech or spoken word, that's a form of artificial intelligence. When they recognize objects, that's a form of artificial intelligence. Machine learning is one of the ways in which they will demonstrate these capabilities, or we enable the computer to demonstrate these capabilities. So, for example, speech recognition through machine learning means that we give sample speeches and tell the computer this is what that speech indeed means, so that through learning the computer becomes capable of doing this task. Internet of Things is completely different. It means that there is intelligence or computing in everything that we see, the things that we see. So for example, there could be intelligence built into a thermometer, which controls, let's say, the room temperature. Or there could be an intelligence in the car which directs it to go to a particular location, the GPS in your car, right? So when you embed computing in things and allow these to be interconnected, allow these to give you data, information, maybe even advice, that's what is Internet of Things. It's pervasive computing, computing in everything that we see.
Krishna, some very relevant buzzwords there at a time when everybody's tracking Google's AI engine as well. But coming to the last segment on the show, Number Crunch, and the number we are crunching for you today is 32%. Now, why is that relevant? Because believe it or not, those are the chances of India winning the T20 World Cup. Now, based on this percentage, they've come ahead of South Africa, Australia. So I guess a lot of people are betting big on India this time around. Krishna, dare I ask on air, what's your pick? And I'm sure if you don't say India, a lot of people are going to consider you anti-national.
Even if that wasn't the case, I still am supporting India. I'm supporting MS Dhoni for, before his career closes to pick up this World Cup. 32% is a very good number. India clear favorites going into this World Cup. But here's the deal. Our first match in the World Cup today is against New Zealand, and that's the only international team we've never beaten in a T20 match ever. So, fingers crossed, Hopefully, this World Cup is ours. On that note, we wrap things up here on ET Now Startup Central. But don't go anywhere. Keep watching ET Now. Coming up next is Market Watch.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.